pharmaceutical space. Indian pharma companies will continue to see growth through the acquisition of overseas assets in the next 18 to 24 months with the aim of deepening their geographic and product diversity, and US will be the natural choice for the Indian pharma companies' expansion. To talk more about this particular report, which has been written by Kaustubh Chaubal, the Vice President of Corporate Finance Group at Moody's Investor Services, joins in now. Hi, Kaustubh. Thanks so much for joining in. First, if you could run us through very quickly the key, takeaways of your report.
Sure. So over the next 18 to 24 months, we expect M&A to be the mantra for the Indian generic companies in terms of growth. And when they look for growth in terms of deepening their geographical diversity, enhancing product diversity, I think US would be a key market that they would look at. US remains the world's largest pharmaceutical market as well as the world's largest generic market in terms of penetration and in terms of opportunity. So it's a market that pharmaceutical companies cannot avoid. The Indian companies would also look at M&A opportunities in other emerging markets such as Russia, CIS countries. And in this, their strong financial profiles in terms of balance sheet leverage will afford them the flexibility to take on more debt if they pursue debt-funded acquisitions. That's broadly the theme of the report that we've written.
Well, Kaustubh, I was just going to a report, but, with US President-elect Donald Trump coming in there, do you see it change things a bit? He was pretty stern in terms of his commentary that came in last week, and that's what really saw a big cut in the pharma index, not only domestically, but also internationally.
Well, the Indian pharmaceutical companies that operate in the U.S., not all export from the U.S. They also have, manufacturing facilities. Some of them have manufacturing facilities elsewhere or also in the U.S.
Okay.
So what we expect is that given the depth of the U.S. market, given the growth potential of the market, we expect around 10% growth over the next 2 to 3 years, given around $50 billion of drugs going off patent. That's an important market that companies can't avoid. So if there would be pressure in terms of the new legislations for non-U.S. companies to operate in the U.S., the M&A route is always there. They could explore M&A opportunities within the U.S. as well. So it's not just M&A opportunities elsewhere catering to the U.S. market, but they could also look at acquiring manufacturing facilities or companies with ANDA pipelines in the U.S. itself.
Why not domestic homegrown companies, Kaustubh, in terms of acquisition targets?
You mean acquisitions in India
why not,
itself?
Yeah, why will Indian companies not acquire other smaller Indian companies to add that capability and niche?
Well, if you look at the Indian pharma space, most of the companies are largely promoter held. There are large promoter holdings, and those promoters are actively involved in the businesses. So, with the exception of Nicholas's generic business that was sold, or Ranbaxy that was acquired by Sun, we've not seen a large M&A activity in India. And in terms of context, the entire Indian pharmaceutical market is $14 billion. Teva, which is the largest generic company in the world, has global revenues of $20 billion. So India is, in terms of value, it's a very small market. The kind of opportunities, the kind of growth potential, and the kind of profitability that Indian companies can have, by expanding overseas, I would say, is much higher than within India itself.
Very quickly, any companies...
So I think that deter, consolidation in the Indian space.
Very quickly, any companies you believe could be on the prowl? If you'd like to give us some names of any listed companies?
Well, all Indian companies, or rather, all companies that have the U.S. as a focus would continue to explore for M&A opportunities, would continue to explore for growth anyways.
Okay.
The R&D productivity is coming down, so you need to get to that next level. You need an acquisition. And with large global generic companies consolidating, there's always this overlap of products that are available for sale. And I think that's where the Indian companies, can participate. Earlier this year, we saw Dr. Reddy's acquiring 8 ANDAs, from Teva. last month we saw Intis, which is another Indian company, acquiring the Irish business from the Allergan acquisition that Teva did. So I wouldn't, drill down to any specific names, but I think all companies that are looking at, the global landscape as a growth opportunity would look for M&A.
All right. Thanks so much, Kaustubh, for just stopping by and, in fact, giving us that perspective. We'll keep